Hey guys, Peter Wright, Iconic Day Trading. Welcome. It is Sunday night, July 19th, 2015. Anyway, I did a webinar last night. I just took my son away for his birthday, and I completed the webinar. I had it posted. I took it down. I didn't feel comfortable with it at all. Um, so, that being said, those who watched it, I did get some comments that that they like the chart analysis and the breakdowns, but for me, it just wasn't me. It wasn't. It was too scripted, too much stuff in there. I got out of books, and that's not how I want to teach you guys. The best way for me to teach you guys is just to talk, let you know what I see, let you know my thought process. I don't want to be reading you excerpts out of a book. So to me, I didn't really like the webinar. I know I can do better, so I took it down. Um, it felt too forced. I wasn't entirely focused, like I said. It was my son's birthday, and anyway, it is what it is. So I'm doing it over again, and hopefully you guys will appreciate that, and you get an extra webinar. And I'm also going to touch on the beginning of trading psychology. So first, I want to do the chart reviews from some of the trades that we took last week and some of the trades that we didn't take last week or that we missed last week. But first, I did get some information by one member, and I have his permission to go over these trades or this trade with him. And he wanted, it was a hell of a trade, heck of a setup. But he's a newer trader to being consistently profitable, so props to that. That's our goal. Is the first step is to be consistent. That is your first step in my room, is to be constantly green. And when you have your red days, they're small. You can make them back in a day or two, but the majority of the time, you're green. So fantastic on that. Then going from being consistently green to making your green days, your wins even larger, can be difficult for some people because you've been burned in the past. You've suffered huge losses. Not all of you, but most of you, or else you wouldn't be here. So when you see that green on your P&L, you want to bank it, which is great, but that's going to put you out of business. Okay? So again, it's just me talking, being real. This feels so much better than freaking having an agenda, being scripted, and everything else. Like the first 3 4 webinars, this is how I do them. This is what I want to do. So it is what it is. So this is just my style. It just means more. I can explain more when it's coming from me and not a book. So that being said, if you cut your winners too soon, okay, you will not last in this business. You know that. It's 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 hard for me at this juncture in my career. I mean, of course, when I was a newbie, it was different. To let your losers go against you, and then when you got a winning trade, you just take the money right away. It's like you're more comfortable letting the losers go against you than protecting your capital and doing the right thing and cutting your losses. Because the first loss you take is always going to be the smallest. Okay? So now, at the stage where I'm at, and as I said in the webinar last night, for those who watched it, you have to take the losses. Okay? If you're not taking the losses, you're making a day trade turn into a swing trade, and then that swing trade lasts for a week or two, and you're adding to it. That's suicidal trading, guys. That's not what I recommend. For some of you it might work, but sooner or later that one trade is going to bite you in the ass and take you out. So, you know, protect your capital at all means. Okay. And now that some of you are being green, on a daily basis, you have to be comfortable letting those trades work out. So instead of scalping for 40, 50 cents, just let it go. Just don't look at your P&L and just study your charts. That's what you need to do, is let the stock tell you when to get out. And as I said in the webinar last night, I have the same problem sometimes. I will take half my profits, if not all my profits, once the reason that I took the trade has been met. Once it reaches my goal, what I was looking for out of the trade, I will take myself out. And I can't do that anymore either, because I'm leaving way too much money on the table. And again, for those that, this is the last time I'm going to say this, for those that watched this webinar already from last night before I deleted it, there's going to be some repetition, so just bear with me. You have to let your trades work, okay? And you can't just take the first move on a stock and bank it. You have to wait for the real move. And the real move is what produces the points, okay? So I have no problem. Let me take that back. I recommend for the new traders that are now being consistently green most of the time, okay, you need to take some of your trade off when it reaches your initial goal, put it in the bank. That'll give you the cushion. Say, okay, I made some money. Now let me stretch my comfort zone. I need to remove myself from my comfort zone. You guys need to be uncomfortable when you're in a winning trade. Okay? You're going to be nervous. You're going to be anxiety ridden. You're going to be scared that things are going to snap against you. It's a feeling, and you can even have fear. Okay? But it's something that you have to program your mind to overcome. You have to. And as uncomfortable as it is, you have to do it as far as your rite of passage into becoming a professional trader. You have to go outside your comfort zone. And what I find a little alarming is a lot of you guys are more comfortable letting stocks run against you and adding to it than you are letting a winner stock and just letting it go and letting it run. So you got to have a mental shift in your thinking and your logic. And you have to overcome and step outside your comfort zone in order to take the next step. Okay? And again, this goes for me as well. I am not excluded from this webinar. Okay? Because I preach to you guys time in and time again, let the stock tell you when to get out. For me, in the beginning, it's been 4 weeks now, 4.5, well, I guess we're going on 5 weeks. It was very hard for me to trade the size that I used to trade, and at the same time, try to explain to you guys what I'm doing while I'm watching my trades, and at the same time trying to answer questions. So when I was up a little bit of money, I just banked it. I just put it in the bank, put it in the bank, put it in the bank. Okay, but now I'm a lot more comfortable. The room was freaking kick-ass on Friday. I loved it. I loved the interaction. You guys are making calls. You're asking questions. Everybody had input. So Friday for me, the room clicked. Finally. I shouldn't say finally. It's been 4 weeks, but I'm an impatient guy. But the vision I have for the room is starting to come to fruition. And that is for all of us to be working together, trading the same methods with your own tweaks on it. Finding out what your trading style is, which is why I recommended the playbook, and I still recommend the playbook, because I got a lot of the material last night out of the playbook, which I reread after I did the webinar, and I still highly recommend it. You guys should be reading the playbook as part of the training program to figure out what kind of trader you are, 2, going over the chart reviews and what you need to be doing with your chart reviews, figuring out why you're trading what you're trading, and going over those 5 steps. You know, the entries, the intraday fundamentals, the intraday technical analysis, all that stuff, and the chart breakdowns. You have to get a complete picture of why we are doing what we are doing while we are trading. Okay? So, that being said, we're going to do some chart reviews real quick because most of you guys know what I look for by now. Okay? I am in a process. I'm going to be working with Bama. I'm putting together a step by step by step. I wouldn't say program, but like a tutorial or whatever of the candlestick patterns, just like what my mind sees when I look at a chart. Because when I look at a chart, I can't explain to you really everything I see at this point in my career. And it's hard for me to do that just because where I'm at and the way I trade, I developed a lot of intuition. Okay? And I touched on this again last night. Market intuition is going to be the final toolbox to put you into the professional trading category. Market intuition. You cannot read about it. The only way you can get it is by screen time. And screen times means trading. Doesn't mean paper trading. It means trading, analyzing your charts, doing your chart reviews, writing down what you did right, writing down what you did wrong. Okay? I am fortunate enough at this point in my career that I have pretty damn good market intuition or gut. Okay? One of the books by another trading psychology, referred to it in the opposite sense as market intuition. Like intuition. If you find yourself hoping and wishing the trade is going to go in your direction, you are not in the right trade. Get the hell out. Okay, excuse my language, but that's just the way it is. If you are hoping and wishing and praying that this trade is going to work out for you, you don't know why you're in the trade to begin with. You should not be in the trade. Take the loss. I know a lot of you are perfectionists, okay? And if you are a perfectionist, unless you change your mindset, you will not make it as a trader, okay? And believe me, I was very selective with who I chose to be in this room, okay? I do not want to see any one of you fail. What I am telling you is what you need to do or what you need to change to become successful as a trader, okay? Like I told you in a couple webinars ago, the market does not care how successful you have been up until this point. Okay? The market will take your money. You have to go through your market tuition costs. You have to go through your screen time. There are no shortcuts. Okay? I am here to help your learning curve and to speed it up and to do what nobody else is doing, and that's really care about you and help you get to the next step in your trading career. But there are no shortcuts. Okay? You need to be doing the studying. You need to be watching the DVD that I recommended. You need to be doing the books. And the traders that I have in this room right now, the handful of them that are kicking ass and have came a complete 180 from where they were, are the ones that are doing what I recommend. And it's not hard, okay? If you guys are as passionate as I think you are after speaking to you, after going through your application, you need to be doing your homework. Every day, I still do my chart reviews. What I did right, what I did wrong. And every day I learn. and I am never, ever satisfied with my trading results. Ever. Because there's always something I can do better. Okay? So that being said, that's another vision I have for the room. Okay? Is to have constant improvement in everybody. Because if we're not improving, we're going to lose and we're going to fall behind. And that's not the type of traders I want. That's not the type of person I am. That's why I'm doing this webinar over. I mean, the webinar was okay last night. I wasn't happy with it because I know I could have done better. That's why I'm doing it again. So, got to have passion. Got to do your homework. Don't take shortcut, guys. And just please listen to me and take my recommendations and just follow. I mean, I got some more feedback from another trader, that hasn't had a lot of luck in the past, trading the higher price stocks. And I get that. And I know a lot of the stocks I trade are higher priced. Okay. So how do we deal with that? Well, my response was, okay, well, you haven't had a lot of success trading the higher price stocks in the past, probably because you didn't have a trading methodology. You probably weren't trading them the proper way. All of you see the stocks that I trade are trending. They're all trending. They're not choppy. They're not all over the place. They're trending. So if you're trading the higher price stocks and you're getting chopped up because they're so wicky and you can't read them, you're not using my stocks that I call for the day, which is fine. I mean, you guys are free to trade whatever you want. Well, I can guarantee you're not trading my methods, because if you were trading my methods and following my calls, most of the time, the stocks work out. And you know how I feel about the higher price stocks versus the lower price stocks. They're less crowded and they trend, and you're more than likely to ride the 9 train all the way down or all the way up versus the overcrowded stocks that everyone else, all the amateurs are playing. Okay? So that's the difference. The stocks that I play for a reason. Okay? It's just what the professional traders do. One thing I do want to mention as well, AP had a hell of a call, and I don't have the chart up on Facebook. He asked me about shorting Facebook on Friday at a certain level. I'm like, I really don't see it yet. The thing was a beast on Friday. So I really don't see it yet. I mean, I would wait for the pullback and then short it. He's like, well, Facebook has a tendency of coming down and, filling down the VWAP. So obviously he knows the stock because he trades it and he knows the stock's history, which is important. You guys always need to have a go-to stock. And that might be one of AP's go-to stocks. And I'm sorry, AP, I'm using this for example, but it was in the room, so hopefully you're cool with it. My go-to stock is Baidu. I mean, you guys need to have a go-to stock that you know, like inside out, back of your hand. So I'm like, AP, I don't see it really happening. And then all of a sudden, I'm looking at the 1 minute, and I see it starting to get heavy, and then I see the 920 cross. I'm like, okay, AP, I see it now. Do it. And it did exactly what he said it was going to do. But for me, I just needed the confirmation of the 920 cross on the chart. And the stock did exactly what it was supposed to do. Okay? It did exactly what it was supposed to do. And AP called it out. And props to him on doing that. Okay? That was a great call. So, let's go back to this chart, which one of the members sent in to me. Okay? It was a fantastic chart, a fantastic call. Okay? So, I don't know if it just came through this way in email, or if this trader just doesn't trade the way I trade. But there's 3 pictures that I'm going to show you. This is just the first step of the trade. First thing that comes to my mind, even though it was a hell of a pattern, hell of a trade, is what's missing, guys. What's missing is the moving averages. Okay, so maybe, for instance, this trader doesn't like moving averages, but as you know, I feel they're vital to my trading. If this trader doesn't like to use them, that's fine. But I'm just curious why that they're not there, because they can only help you execute and manage the trade better. So this was a great short, okay? He didn't catch it here. He caught it up here, okay, which was nice. You got the reject, got the smaller candles. And then he caught the snap with the trend line support. He caught the break, and he covered. And I don't know what this was. Maybe, I'm going to say 50 cents, 60 cents. It was a nice cover, okay? You look over here, yeah, you got some support over here. So he took the whole position. And this is one of the traders that has came a long way and now wants to start maximizing his gains on every trade. So maybe you take a quarter off or a half off right here, okay? And let's see what happens. Then you got this candle. It breaks, got bought back up. Okay, this will be a nice area to get short. Or you're still good because your 9's going to be sitting right here somewhere. Okay, let it ride down. It comes down. It's going to test this double bottom area, which it did. It only came up probably 75 cents or so. You're still good because your entry is up here. You got some in the bank here. And this area right here, you can see acted as previous resistance. It didn't break that area, so you're still good short. So what happens? It breaks down some more. Even though he's all out here, came down, tested the double bottom, got rejected here, trend line resistance. Nice fade down. Okay? So then we're going to go to this second part of this trade, which is just a continuation picture. This is where the trader covered, right? Came down, told you, came back up, tested this trend line resistance, broke even further. So even if you got out right here, okay, you could have added right here. But you really should have, you sold half or sold a quarter and let the rest ride. Okay? Because I can see this. The 9's got to be right here all the way down. Okay? It never, aside from hitting the target, it never gave him a reason to completely sell. It went all the way down. And every time it came down, it retested and failed. This right here didn't even bother retesting. It's just a flat out failure. Okay? I can see possibly getting stopped out here, but I would use this area, this high, as my stop. Okay? This candle came up, got rejected, sold into, and for those that watch that DVD, just a matter of time before this whole candle would have been down here, all red, because it was green and then it went red. So you know what's coming next is a red candle. If you watch the DVD, more red. Okay, came back up, smaller, got lower high, still no reason to cover, another 50 cents. Here, you would have got stopped out. But if you look at this, you can see the trend. There was no reason to take all of the money off right here. And this is where I'm going to challenge you, each and every one of you, to step outside your comfort zone and let your winning trades ride. Okay? Not your losing trades. Your losing trades, you got to be fierce and vicious and protect your capital with everything you have. Because that's your money. That's your buy-in to be a professional day trader. Without that, you're not going to be a trader. And then you have to get a real job, okay? And you're not going to be following your passions. So, first of all, protect your capital. take your freaking losses. The first loss is always the easiest. Don't let stocks go against you. When you're in the winning trade, sit on your freaking hands and let it work out unless it breaks to 9 or 20 or gives you a reason to get out. And again, this goes for me as well. Okay? Because I took myself out of a couple winning trades that would have gave me probably 4 to 6 points just because of either a gut or because I didn't look to the left. Okay? Or because the stock hit my target and I was happy making that money. But for me, I'm challenging you to push your comfort zone. I'm going to be doing the same thing for myself. And I'm going to be pushing my comfort zone as well. Because I love this room. I love trading. I need to go back to trading my size. I think the basics of my methods are understood. And if they're not understood, then I can suggest you go back and watch all the webinars, reread the study materials, and if it's still not understood, pick up the phone and call me. And we will do chart reviews one-on-one. I do not have a problem doing that at any time. As long as I know ahead of time, we'll set up a time that works for both of us. We'll do the chart reviews. Okay? But it's time we start making these points after points after points because the calls are there, guys. We just got to now manage our trades. Okay? So enough of that. Let's go on to a third picture. It's just the final. Where are you? It's just the final picture of the trade. It just continued up. You probably got stopped out here, right here though on this break. You could got re-entered as a short, and I don't know what this is. I'm gonna say 50 cents here, 50 cents here, probably another buck. I mean, this would have been a hell of a trade. One hell of a trade. And even if, like you said, you took it off in the beginning, it gave you multiple times to re-enter. Just because you take 40, 50 cents out of a stock doesn't mean the move is done. Keep it on the screen, wait for another setup, and nail it again. And again, I'm got to do the same thing. I'm going to stop flipping from stock to stock to stock. When I know stocks are moving, when I have them up on my watch list for the day, I'm probably going to get in the habit of just watching those stocks and just nailing them. Because once they make one move, they're bound to make another move and then another move. Okay? Very important that we stay focused to the watch list. So what else we got up here? Let's do this Baidu on Friday. This one I was really annoyed myself about. And I know we spoke about, well, how do you get over it? How come you don't let it bother you? This one bothered me, but I got over it because, you know what? Tomorrow's a brand new friggin' day. Brand new trading day, brand new opportunities. There's going to be just as many opportunities to capitalize on as there was on Friday. And you're not going to be able to catch them all. If you try to catch them all, it's going to mess you up mentally. It's going to mess up your trading. And you're going to end up trading poorly, which is going to cost you money, which is going to put you in a funk. And once you're in a trading funk, it's so hard to get out of it, guys. So you got to take it for what it is. Okay? It's not about being right or about being wrong. Okay? It's just about putting the probabilities and the odds in your favor and executing them. Okay? One thing very important that I did touch on last night that I'm going to touch on again is knowing when to size up and knowing when to size down. Because not every trade requires the same amount of shares. Okay? When you have an A+ setup, when you have everything going your way, you got to go full size. You have to. Because that's what's going to separate you from the rookies, guys. When you got your A+ setups, that's when you put everything on the line and you take advantage of that freaking move and you bank. Okay? When you have a C or a B+ setup, you go half size. So depending on the setups and how strongly you feel and how the chart's reading, that should tell you, okay, is this a real powerful setup? Is this an all-in, balls to the wall setup? Or is this just going to be a feeler, for 500 shares or 1,000 shares or whatever your feeler is? but you don't use the same amount of shares on every trade. It depends on the setup. And going back to that, you will figure out what kind of trader you are and what kind of setups you like after you get done reading the playbook. Okay? So this chart here on Friday, I had the short right. Okay? I had it right here. I was calling it. This thing was up like $9-10. I knew it was going to fade. So I had the short called, came back. I took myself out of it because I saw this congestion over here to the left. I took myself out. It came out. I would have got stopped out anyway. And then NCR got halted and opened up, and I totally missed this breakdown right here. Totally freaking missed it. Even though I knew it was coming, I missed this, and this would have been well over a point. An easy fade. This is an A-plus setup because you knew it was happening. Friday afternoon, up $9-10, rejected the 20, perfect fade opportunity, an easy $1,100-1,200 just missed because I was preoccupied with watching another stock. I wasn't even trading the other stock. I was just watching it. But you know what? I'm over it. I missed a freaking trade. It's not the end of the world. Tomorrow is a brand new day. So again, I took myself out. I would have got stopped out. I just missed a re-entry. Even though I knew it was coming, I just totally missed it. And it happens, guys. It happens. If you expect to catch every trade, you're in the wrong business, man, because you can't. Okay? You need to be particular with the stocks that you trade and be particular with the setups. Okay? We don't chase. Okay? We wait for the setups to come to us, and then we snipe, and then we execute. Okay? This was an A-plus setup. Okay? Ideally, right here would have been a beautiful, beautiful short. Okay? This thing was down. This is Sherwin-Williams. This thing was down 30 points at one point. Okay? And I'm going to tell you really like what I see right here. I was telling you guys probably like around here that this stock was way overdone, that you're going to get at least a third retracement on the stock. It's down 30 points. Okay? You don't get that kind of move without some kind of retracement back to the upside, and vice versa if it's up. Okay? So on top of having a double bottom right here, okay, you got a higher low being put in right here. Okay, so now the stock's on my radar. Okay? It was actually on my radar from the open. But now I'm like, okay, I'm going to get interested. And really to make things a little more complicated for you guys, I'm looking to go long. How many of you guys know me to take freaking long calls? I think I called 4 longs this week, and luckily they all worked out pretty well. So I actually enjoyed taking these things long. So what I saw on this chart, I saw a double bottom. Okay, I see this thing down 30 points on earnings, which is ridiculous. I see rising, curling, moving averages. Okay, I see smaller candles. Okay, I see it testing VWAP. You got the 9, 20, and 50 moving average cross. You have it break VWAP. This is an A-plus setup. Full size. Go in long over this break. Okay? A little more aggressive. You could have got it right there. And you would have seen it would have been an extra point. I got long. I made about 5 points on this trade, 4.5, 5 points just in these 2 candles, because this was the ideal A-plus setup. You see the double bottom, you see the higher low, you see the rising 9 and 20, testing, getting closer to closer, breaking out over VWAP. Got the 50 moving average cross, you go long, and you ride it up. This thing shot up like a rocket, and I left. I think I left like 3 or 4 points on the table after this. I should have got back in, but these are the setups. When you see these A-plus setups, on top of this trend line break, you just draw a line right here. On top of this trend line break, you just add that to every other indicator we have right now, and you're talking the friggin' A double plus setup right here. Beautiful, beautiful long call. I mean, it was just a beautiful trade. I got out here because I looked to the left. Okay, look at the left. This is where all the congestion was. I'm like, you know what? This thing just fucking ripped 4 points on me. I'm out because I see this over here. Okay, it went up, it pulled back to the 20, and it kept on going. It eventually faded back, but you know, it's okay. One of those examples where when the stock goes from 250, let's say 255 to 260 in a matter of 4 minutes, I'm taking the whole damn thing. Okay, I'm taking all the profits, especially because of this. Then you look to re-enter. Okay, but that is an A plus setup right there for me, and it should be for you as well. This is the short sell that I had on REPH on Friday morning. It's 15-minute chart. I don't know why I copied the 15-minute chart, but I did, so it is what it is. This was up on clinical phase 2 data. I think the $15 stock was up $3. I was telling you guys, pre-market, this is way too much of a move, guys. Way too much of a move. So I expected it to come down. I told you I was looking short. I got short up here. I think it was like on 1806 or whatever it was. And I covered down here just because I looked to the left again and I saw that. I'm like, all right, I'm covering. So I got over a point on this move. And I think it was less than 3 2-minute candles for this move. Okay. It kept on going. I was expecting this thing to do a complete gap fill, which it pretty much almost did. But I was very happy. When the market gives you a point or more at the opening on opening gap up sell off, you got to take the point. Okay? You can always re-enter, but you got to take the money, especially when you're playing the opening gaps. Okay, that was just a sweet trade on Friday, and that was called in the pre-market. It was on my list. Stock was up. It was overdone. It was up way too much. You need to anticipate it to come right back down, because that's what every other professional trader is doing. That's what you're looking for. That's why the stocks that I play trend, because that's what other proprietary and professional traders are doing. This is Google. Okay, I was playing Google on Friday. This kind of annoyed me a little bit because it was a rookie mistake on my end. Came down. I see this, have problems up here in this area. Got rejected. Got the moving average cross. I'm like, okay, you know what? Let's see. I'm going to try to get a bounce off the 50 MA. So I went long right here on the 50 MA. And it came down. Probably had a little too much size. And I thought it was going to continue to drop. So I took it off for a loss. I did not, however, look over here to the left. On this trade, I was so focused on the level 2s and the spreads and this thing jump around dollars at a time, I didn't look at the freaking chart. Look over here to the left. You see the support right here. What I should have done was added or just sit on my hands instead of taking myself out. Because if I stayed in this trade and looked to the left, knowing I had that support right there, I would have had 5 points. Right up. Simple trade I took myself out of. Just because I didn't look to the left. It's simple, guys. It's simple. And going over this, makes me a little, it gets me a little frustrated. But like I said, tomorrow's a whole nother day, and hopefully we're going to nail some stuff tomorrow out of the gate. The volatility was there on Friday. The volume's coming back. The room, the Iconic room, everyone's helping out, putting their alerts out there, asking questions. Things are finally starting to come together. This is CF. This was in play last week. I don't remember what day. Just nice scalps. When there's nothing else to do, guys, I scalp a lot. And I don't post a lot of my scalps because by the time I do, it's too late. But had a nice scalp here, nice scalp there, nice scalp there. And all along, you can see, never broke VWAP, was riding the 9 chain all the way up. So this was a beautiful stock to play. Beautiful stock to play. See what else we got left. NTES, Again, another scalp I had here, but what I missed obviously was the front end with the short going down here, and then I missed this right here. This is let's go from here. I'm gonna actually do it over here. Let's go from here to here. This is what I missed. Okay, I missed this candle, followed by this, followed by the 20 period break or 9 period break. It held, came up, it held again. Right here, I should have gotten long. Right here is long. Why? You got these two candle patterns. You got the 9 period being reclaimed. Look at the volume coming in on this green bar. Change of direction right there. Okay, that's what this stock's telling me. Came down, tested the 9MA, it held. You go long. So if you go long, let's call this 119. Comes up, right through VWAP, comes down, holds VWAP, riding the 9, and I would have sold here at, say, 125.60, wherever this 50 period moving average is. Okay, me, I waited till this broke. Okay, I waited for the higher high, and I went along here. I scalped it, got a little over a point out of it, but it should have been from 119 to 125. It should have been a 6-point move, and I got a point out of it. So remember this setup. Okay, bottoming candle, big green bar, volume, reclaiming the 9MA, testing the 9MA, green bar, you're going long. Especially being that you got the higher low put in. You know, if you go long here, what's your risk? Your risk is right here, right below the 9MA. Eric, 714 on Friday made a very good point. When you guys put your stops in the market, you don't put them directly on top of the moving average. So whatever moving average you use to enter, if it was a 9 or the 20 or the VWAP, give it, 10, 15, 20 cents depending on how much range there is on the stock, because the moving average is just a guide. It's not set in stone. It may try and it may breach the moving average, but you need to have the candle close above the moving average in order to be taken out of the trade. Okay, and if you have your trailing stops, you got to keep that in mind. And going back to letting your winners run, all you got to do is just use trailing stops. And when your stock drops another 30 cents, you move your trailing stop. Okay? Or if you want to do a percentage or whatever, they're like trailing stops should just follow you automatically. And if you get a bigger move, you get a sudden snap, okay, you got to take your profits. You got to, especially if you get a big dollar snap all of a sudden, you got to take some more of your profits. Not all of it, but you got to take more of your profits. The trailing stops will follow your trade higher or lower depending on the direction that you're in that's working for you, if you set them up correctly. Okay, they'll just adjust with the market. Okay, that's what you need to do. That way, you'll know that you're going to lock in your profits and you're going to maximize your profits. So that's pretty much for the chart reviews. That's all I'm going to cover. Aside from that Facebook, which was a really nice call. So, two quick things I just want to touch upon. I'm going to start this whole trading psychology, which is going to open up a whole bunch can of worms for a lot of you. Okay, but I mentioned this before. A lot of you are in here with this being the last room that you're going to be in, or you're not going to be trading anymore. Hold on one second. I get some water. That being said, I'm sure a lot of you studied a lot of the crap. A lot of the stuff that's out there. There is some good stuff out there, and there's some really, really bad. The important thing is knowing how to implement it and execute it. But more importantly, you guys need to know that trading is 80% psychological. Okay? That's the hard part about trading, guys, is dealing with the fear and the greed and dealing with the losses and having the fear to pull a trigger and hesitating and wondering if you're chasing. You can't have all that crap going on in your mind. You're just trading, okay? You are just trading. If you hesitate, you're going to miss out on the trade. When you miss out on the trade the first time, it's going to put more fear in it the second time. If you miss the second time, the more times you hesitate, the more times you wait, the harder it's going to be to get your ass back on track. Okay? You can't hesitate when you see your setups. You got to take them. Even if it's 10 shares, you have to take your setups. You can't second guess yourself. You got to program your mind that this is what you're doing. You see a setup, your job is to execute the trade. And after it's executed, your job is to protect your capital. After that, your job is to maximize the trade. Simple as that. I gave you the tools, what to look for, on how to enter trades, and where the proper entries should be, where the money should follow our entries and push the stock in our direction. I can't make you put stops in the market. Okay? I can't make you, take your losses. I can't help you if you're going through a trading funk because you put yourself in a trading funk because you're talking negative, or you got in a big fight with your significant other, or you're not feeling good. I mean, you would be surprised on how much of your emotions are reflected in your trading. If you're not feeling well, you shouldn't be trading. If you have a cold, you shouldn't be trading. If you're trading from work, you should not be trading, because you can't be focused when you're at work and you're trying to trade, especially if you're having a hard time being consistent. Okay? If you got in a fight with your wife or your husband, you should not be trading. Okay? There are just so many different areas that we have to explore to find out why at this point in our trading journey, well, in your trading journey, why you are either in a self-destructive mode, blowing through your capital, not paying attention to your stops. There's a reason for it, okay? It's not because you're a bad trader. It's just because there's something emotionally going on that's preventing you and allowing you to have the success that you want. The biggest and best thing that you can do is imagine that you are there already. If you can't picture yourself being successful, you're never going to be successful. Okay? You need to be able to picture with great detail everything that you want out of trading. Okay? Make a list. But if you don't believe it, it's not going to happen. Okay? The mind is not stupid. Okay? There's a book. One of them's Law of Attraction. The other one's The Secret. Huge believer in it. You guys call it corny. I don't care. The shit works. Excuse my language. It works. Okay? You need to believe that you can do it. And if you don't believe you can do it, you are not going to be successful. You're not going to be successful. I hear a lot of times in a room, or I read a lot of times in a room, man, that was an idiot mistake. Or like, man, that was stupid. I shouldn't have done that. I don't want to hear that from you guys. Okay? Because what you're telling yourself you're stupid. You're telling yourself, oh, I made a stupid mistake. Or you're calling yourself an idiot for not taking a trade. We can't have negative talk. Period. I don't care if you're in this room or you're on your own trading. You cannot be a negative thinker, because your mind will set itself off to be a negative thinker. And that's going to screw you up like you have no idea. You need to always change the negatives into a positive. Whatever the situation is, you need to get rid of the negatives and reinforce it with a positive. Like that Baidu trade. Yeah, I'm pissed I missed it, but you know what? I'm going to get another one on Monday. That's what I do. I look at the negative, I replace it with a positive. My mind always says positive. If I have a holy shit day where I lose a lot of money, where I stop trading for the day, you know what? That's okay. It'll mess me up for that day, but I know in 2 or 3 days I'll get that money back because I believe in myself and I've done it before and I know what it takes. Okay? And to be a successful trader, you need to have a certain psychological makeup. You need to have a commitment. All of you guys have that, or at least I think you have it based on your applications. High level of discipline. You need to be able to control your stops. High level of self-control. You cannot be a suicidal trader, guys. You can't be doubling down, averaging into the trades, making a day trade into an overnight trade. I can't tell you not to do that because traders will do that if that's what they've been doing. What I'm telling you is I would never do that. I stick to my plan. If my plan is to have a day trade and it goes against me, I take my freaking loss. Because there's nothing that's more important to me in this life aside from my family, my wife and my son, than my trading capital. Because without my trading capital, I'm not going to have a freaking job. So I protect my money as fiercely as I possibly can. Okay? I'm not going to let anybody take my money. Okay? And that's what it is. And I'm telling you, there are so many traders that will just eat you alive if you don't protect your capital. Because they know, and when I say they, it's the market makers, okay, or the prop traders, they know what the amateur traders are looking for. And they'll give you the fake setups, and you'll buy into the fake setups. And before you know it, you're shooken out, whatever. And then once you get out of the stock, they'll rip the stock in the direction that you were in it in the first place. Okay, that's the games they play. So if you know that, why are you going to put negative thinking on top of everything else? You can't have negative talk. I don't want it in my room. Okay? There's no place for it in any professional trader's lives. Everything has to remain positive. We have enough shit to deal with on a day in and day out basis of taking losses and mentally coming back and pushing the button and clicking the mouse, and we're still buying, we're still selling, we're still buying, we're still selling, and we're accepting the risk. Okay? You can have 10 losses in a row, and on that 11th time, it's going to be so freaking hard to pull the trigger on that 11th time, but you know what? Your job is to pull the trigger on that 11th time. Because that 11th time might be the trade to make back the first 10 that you lost. Okay? So enough of the negativity. Everything is positive in this room. If you're having a bad day, PM me, call me, text me, whatever you got to do, and we'll walk through it together to get you back on track. But every negative thought needs to be replaced with a positive thought at that moment. Okay? So after self-control, you got to be financially stable. If you don't have enough capital to be trading, okay, and you're relying on your trading capital and you're not green yet consistently, you shouldn't be trading. Okay? I don't want to say that to you because I want you to be trading. I want to help you get to where you want to be with your life so you can give your family what you want, so you can give your kids what you want. But you have to take care of you first. And you're not going to get where you need to be unless you have the proper tools. You got to be self-motivated, and you have to have a burning desire to succeed. Like when I'm trading during the day, I'm here. I don't even take like an hour for lunch. I may take 5, 10, 15 minutes and eat in front of my screen. But the days go by. I'm sorry. Let me take that back. On a busy day, unlike the last, 2 weeks that we had on 4th of July, which the market just freaking crawled by, all the other times, the time just flies. It just goes by so damn fast. And it goes by fast is because I love what I'm doing. I'm driven. I, to this day, have a burning desire to succeed, and you have to have that. You always have to want to be better. You got to have a desire to succeed. You have to. And then we're going to get into passion a little bit. And then the next one's going to be all about passion. That's why passion is so freaking important to me. You have to have it to be successful in trading. You got to have patience. Something I need to work on as well. Letting the trades work out. You need to have patience. You need to be meticulous, detail orientated. You need to study the methods and your entries and why you're doing it. And if you miss the entry, you do not chase the entry. Okay? I mentioned again on my webinar, my desk area is organized and clean. There's no clutter because clutter is going to mess up your trading. When I come to work every day, I dress like I'm going to work. I don't wear a friggin' suit and tie, but I'm business casual. You know why? Because this is a job. Okay? There are traders that come wearing sandals and shorts and, t-shirts. Great for them. But you know what? When you feel good about yourself and you look good, okay, it's going to be reflected in your trading. Okay? All this stuff matters. There's going to be people that tell you that it doesn't. I don't care. I'm telling you it does. So if you're one of those guys that are trading in flip-flops and, a pair of cutoffs and, a t-shirt or, undershirt, whatever, dress up a little bit, guys. Feel good about yourself. See how it's going to reflect in your trading because it does make a difference. Okay? You need to be a decision maker. Okay? You need to have the aptitude and the ability to make sound decisions in a split frickin' second. Okay? Again, you can't hesitate. I'm trying to give you guys the tools, and I will give you the tools over and over and over again until we all understand the tools to what to look for to make those split-second decisions. Like Bama's getting it, Evan's getting it, Federico, Eric C., 714, all you guys are getting it. And you're starting to anticipate the moves before they happen. That's the market intuition because I know all of you guys have done the screen time. And that's when you get the intuition. And that's what's going to put you guys in a totally different category than everyone else that's buying the bullshit DVDs, that's falling for the shit that's out there. This is what's going to make you a professional trader. Is by screen time, following the rules, protecting your capital, and getting that intuition. That intuition is the last piece of the puzzle. And that will come with screen time. Okay? You need to be a leader, and you need to be persistent. If you are not persistent and you give up easy, you are in the wrong business, guys. And everybody that I have in my room, everybody has had prior experiences trading. Okay? They have just not gotten it. They have not gotten over the hump. So everyone in my room, I fully believe, have all these qualities. Has a psychological makeup that I am looking for to surround myself with in iconic day trading. That's why you were chosen. And if you think that membership application is a bunch of bullshit and I just have it up there to make it seem like, oh, I'm welcome to iconic, you're wrong. I mean, I turned a lot of people away because they only want the calls. Okay? And that's not what I'm about. We're getting there. But I want you guys, like Eric C., I want you guys to know how to fish for yourselves. And if you decide to stay in my room, great. If you like the camaraderie, that we're building together, this little circle, if you want to stay, love it. Fantastic. But I would be just as happy as once you learn how to trade for yourselves, knowing that you don't have to pay to be in a room to learn how to trade anymore or to be a sheep and just follow blindly other people's calls that don't know what the hell they're doing. Okay? So my goal is to get you confident enough that you can trade by yourself. And if you decide to stay because we are all making kick-ass calls and we're making a great living doing this, you're more than welcome to. But how many rooms would actually tell that to you? None. Absolutely none. So the people that are not suited for trading, and I'm going on an hour, so I'm going to try to sum this up. Lack of discipline, impatience, lack of self-control, compulsive gambler. You shouldn't even be thinking about trading. Overly aggressive. If you're overly aggressive, I guarantee you will fail, guys. I guarantee you. When you are in a losing streak, best thing to do is cut down on your size and have positive reinforcements with your thoughts. Okay, if you take a big loss because you didn't follow your rules, you step away from the computer either for the day or for a couple hours. You do a trade review right then and there, and then you make a decision on what you need to do. And what you need to do is get your ass back up on a horse and start trading again and start following your rules. I can't make you follow your rules, but you need to follow your rules if you want to be a successful trader. Okay? Lack of commitment, again, that's been covered. I know the commitment is there. Afraid to make decisions. Okay? That will happen at some point in your trading career. Everyone's going to have that feeling. But to have it constantly on a daily basis, no, you're not going to make it. So don't even bother. Save your money. Go do something else. Okay? Undercapitalized. You have to have enough funds to pay the market tuition. And for those of you that are trading a small account, which I know there are some, I can say this, I'm very proud of you guys for trading the 25 to 50 shares, because that's all you should be trading at this point. Okay? And I might have touched on this before, but I don't know if I did. But what I can tell you is back when I was a prop trader, there's actually, for the new traders that don't have any experience, that go through the programs at certain firms, okay, they will take the opposite end of your trade because they know that you're going to lose. Okay? They will bet against you because they know that the odds that you are going to blow up your account are in their favor. Okay? So the offshore firms that have the small accounts that give you the 10 to 1, the 20 to 1, whatever it is, I wouldn't be surprised if they are not taking the opposite end of your trade. So by you taking the smaller size, it's the best thing you can do. Because number one, it's a smart thing for you to do because of your capital. And number two, they're not going to bother going against you for 25 or 50 shares. So that's a very smart thing to do. If you're highly and easily stressed, you're not suited for trading, guys. You're not. Because this is a very stressful thing, what we do. Okay? I actually love it. I love trading. I try to stay calm, relaxed, because I am blessed to be able to do what I do. There are times you might hear me drop a couple curse words, out of frustration or whatever, but I'm not stressed. Usually I'm just calm, cool, relaxed, just calling out trades or, calling out what I see. And I've been working on calling out trades a lot more clearly than I have in the past because someone brought to my attention that they didn't understand that what I was saying was an actual call. So thank you to that person for bringing that to my attention. That has changed, and I just need to get in the habit of putting my trades now into chat. I still love doing the audio. I know a lot of you guys don't participate in the audio, and that's fine. I think we would learn faster if we all used audio. But hey, after Friday, I'm happy with what I saw. Again, going back to not suited for trading, negative thinkers. Okay? Negative outlook on life, always expecting the worst, and always likes to blame others when things go wrong. It's not about being right or wrong, guys. That's not what trading is about. Trading is about playing the probabilities. You're going to be wrong. You're going to be right. It doesn't matter. If a trade goes in the opposite direction, take it off. If the trade goes in your direction, let it ride. Okay? You can't blame the market for your losses. Okay? You can't say, oh, I should have done this and I did that instead. Oh, that was a stupid trade. Why did I do that? You can't do that to yourselves because your mind will focus on the negatives more than the positives. Okay? Trust me on this one. Okay? The trading psychology for me back in the day was huge. Huge. If you need more work on trading psychology, there's Trading in the Zone by Mark Douglas. Great book. Also, there's a guy nicknamed called the Prop Doc, who's a proprietary trader to some of the largest hedge funds out there, named Dr. Andrew Menaker. I took his course back in the day, and quite honestly, it was a waste of money. But what I will tell you is you can get snippets on YouTube on Andrew Menaker, Menaker, on YouTube, and just watch them. And I guarantee you that you will get stuff out of it. Okay? But in my book, Mark Douglas's book is probably the best right now for this group as far as where we are. And the last one is being a crowd follower. And that's why I don't like trading the momos of the day, like the BLTCs, the PBMDs. You guys might get lucky and, score, make money on them one day. But if you guys play these stocks over time, guys, you're going to get burnt. I mean, look what happened to half of friggin' IU. Don't follow the crowd. That's why the stocks that I play, you don't see the crowd playing them because that's not what professional traders do. So, I think I'm going to cover two more things and then I'll let you guys go. Mistakes that traders make the most. Okay, and I already covered this one: trading more money than they should, lack of discipline and patience. So make sure that you guys are trading adequate risk reward of at least 3-to-1, using different share sizes depending on the setups. It's very important when you have your kick-ass setups, take advantage of it and go all in. Okay? Number one mistake that most traders make is starting before you guys have the knowledge and the education. Okay, just like anything else, you want to be a lawyer, you want to be a doctor, you have to go to school. You can't just learn it by reading books. Okay, trading is no different. You have to learn from somebody who has already made the journey and successful before you. Okay, and that's what I'm trying to do. I can tell you the pitfalls to avoid, and I'm trying to help show you the way. Learning to trade on your own is very, very expensive. Every error you make will cost you money, and the majority of the traders will give up before they could succeed. That is why I started my room. The last room I was in, I saw a lot of traders taking a lot of friggin' losses, and I wasn't at all comfortable with the calls that were being made and all the hindsight trading. So traders started reaching out to me and I started helping them. And that is why I started my room, because there's no one really out there that's genuinely, sincerely wants to help traders succeed. And if I can help you shorten the learning curve, then you know what? My job is done, because this second half of my life, that's what it's all about. Okay? If I want to be remembered for something, it's going to be, you know what? I helped this guy follow his dreams. I helped him attain his dreams. I helped him give him and his family the life that he wanted. So that's what it's about for me. Okay? On top of paying my bills, obviously, but that's where my trading comes in. So, if you, two more things on this: common mistakes. Basing your trading success on winning trades versus losing trades. For example, I'll get out when I break even. I'll get out, and you keep on averaging in until you break even. That is going to wreck you. I think I said that 10 times already today. You can't let your trades take you out of the game. If you cannot admit or you cannot take the loss, you shouldn't be trading. Because losses are a dime a dozen. They're going to happen every single day in this business. But you still got to pull the trigger and do what's right on the next trade. Trading without a proven system or methodology. Okay, I am here trying to show you my methods that work over time. Over 20 years, they work. Do I tweak them? Yes. But overall, the premise is the same. Biggest one, taking small profits and letting your losses run. The primary rule to successful trading should be cutting your losses short and let your profits run. It's as simple as that. A lot easier said than done, but that's what we're going to be working on over the next couple of weeks, is letting our winners go. But you need to let me know when you're in a trade. Okay, you have to let me know when you're in a trade so I can follow with you. Okay, characteristics of a good trader: a strong innate drive to improve and develop your trading skills on an ongoing basis. I am never satisfied, and I don't expect any of you or anybody in our room to be satisfied with our results, because we can always do better. Okay? Even when you're trading my system or my methods, you need to be monitoring the trades. Okay? The anticipation of entering and exiting the market, it all lies in your hands. So you need to be able to execute and manage your trades. Okay? And that's pulling the trigger, getting yourself out, letting your trades go when they're working your way. Okay? The goal and focus are to trade the right way, not about money being made or lost. Okay? Trading is not about money, guys. If you think trading is about money, you're wrong. Trading is about trading well. That's what we do. Money is just a freaking byproduct of doing something we love. If you're trading just to make money, you will not make it. Money comes as a byproduct of trading well. Trading needs to be executed with discipline and without emotions. When you let your emotions get into play, you're going to get screwed up. Okay? That's what we need to work on, is managing our emotions. Okay? I try to check my emotions at the door when I come to my office every morning. Okay? When I have problems doing that, I take my P&L off the screen. There are different ways that will work for different people, but you need to get a hold of your emotions. If you're an emotional person by nature, you're not going to be a successful trader. Okay? Or let me rephrase that. If you cannot disconnect yourself from being an emotional trader or an emotional person when you're trading, you're not going to make it. Okay? Outside of trading, I am an emotional person. But over the years, I kind of had that little light switch where I can turn it on, turn it off, because I know if I let my emotions get in my way, I'm gonna screw up my trading. But that just comes over time, and that will come in time for you guys. Okay, so last thing, and then I'm gonna call it a day, and we'll cover passion next time. Characteristics of an amateur trader. Okay, trading will appear to look very easy in the beginning. Okay, we all know, we've been there, done that shit. It's not. Okay, you'll get the big couple wins in the beginning, and that's going to generate a feeling that the markets are easy to figure out and a false sense of, holy shit, I can actually trade for a living. And then you go balls in, and before you know it, you blow up your account. Total false sense of security. Okay, that's not what we do. That's what amateurs do. Taking wild risks and creating large losses. Okay, everyone's done that. I know that. That's what we stopped. Okay? A losing trade creates fear of the market. I already told you, you can't have fear, and you can't let a losing trade create fear. And you can't let a losing trade cause hesitations for your next trade. Because the more that happens, the harder it's going to be to break. So break it the first time and get right back on the horse and take the trade. Okay? When you have good setups and good trades that are missed by result of fear, that's a rookie amateur mistake. Okay? You can't let fear mess up your trading, guys. You can't. Okay? And then when you get very aggressive trading, when you miss opportunities, it's only going to result in bad trading, strange ideas, and it's going to accumulate into a friggin' horrific loss. Just call it revenge trading. It's as simple as that. You cannot do that. That's how you blow up your accounts, and that's what amateurs do. We are trying to be professional traders. Okay? When you're winning, you don't get over excited. Okay? Because you may create a trade that is not there, or you may be getting into a trade with bad odds. If you create a losing track record, you need to be reviewing your trades. Look for tendencies, or try to identify repetitive patterns of success and failure. Find out what patterns screw you guys the most. If it's the parabolics, like for me, it's the parabolics. So you know what? I stay away from them. I don't touch it. I don't touch it. I want to play them, but I don't, because that's what kills me the most. You need to figure out what patterns cause you the most losses. And if you don't isolate your mistakes and correct them, you're going to continue to lose, and you're going to be out of the game. If you lose your confidence, you need to stop trading. Okay? You need to stop trading once you lose your confidence. The number one cause of people failing in the industry is lack of discipline. You need to control your stops. It's as simple as that. It takes discipline and self-control. So let's work together. Let's have a kick-ass week. I will touch on passion on my next webinar. I also owe you another webinar because I told you I'd do 2 this week. I did 1 last night. I didn't like it. Like I said, it wasn't me. It wasn't from my heart. I do the best webinars when I just talk from my gut and look at charts and tell you what I see. So on that note, hopefully this helped you guys. I know I got a lot out of it. Please get the DVD and do your homework. If you're not using the MAs, put them on your chart, please, and do your trade reviews. Because one of these days I'm going to ask you guys to send me a copy of your trade reviews. And I would like to get a copy from everybody if I ask you for them. Because that's how I'll know that you're serious about wanting to make this happen. Okay? I'm doing all I can to make this happen for you guys, because that is my goal, is to help your learning curve and to help give you guys the tools that I didn't have when I was learning how to trade. And for the new traders in the room who don't know this, I lost over 80 grand back in the 80s, late 80s, early 90s. Back then, 80 grand. God knows what it's worth now. I wish I had someone like me back in the day point me in the right direction, who actually gave a shit about you. Okay? So we're in this together. I'm here for you. Don't be afraid to reach out to me. You all have my cell phone. Friday was just a rocking day. Let's just keep it up, and let's continue to do what we do. And that's learn, grow together, become a stronger circle, and make money and become professionals. So on that note, thanks for listening. And we'll get another webinar going rather soon. Thanks, guys.